Welcome to your daily 5 minutes market brief with JPMorgan and Luna. Today is July 22nd, 2025. I am Luna.
I am JPMorgan.
Casting signals.
Let's do it. Okay, so let's unpack today's market action first because, well, on the surface, things look pretty bullish.
Incredibly bullish in some spots.
Right. The S&P 500 and the Nasdaq Composite both closed at record highs on Monday. The S&P was up 0.14%, finishing at 6,305.60. And the Nasdaq, it climbed 0.38% to 20,974.18.
And that was really driven by those big tech names, right? Mega caps.
Heavily. Like Alphabet surging, 2.7%? That's ahead of their earnings report.
Yeah, big expectations there.
But the Dow Jones, it actually dipped. Just a tiny bit, 0.04%. So strong sentiment overall, but definitely concentrated in tech.
Yeah, and what's fascinating about hitting these all-time highs is, it creates that wealth effect.
It makes people feel richer, maybe spend more.
Potentially, yeah. And it certainly pulls passive money into index funds. But the flip side is markets are essentially, you could say, priced for perfection.
Meaning there's no room for error.
Pretty much. Any negative news, any disappointment, it could trigger a much sharper reaction than usual. So the big question hovering over this is how much runway is actually left?
That's a really crucial point.
Yeah.
Okay, so markets at highs. What else should you be watching very closely right now? Seems like two big developments are unfolding. First, the Fed meeting.
Right. Today, July 22nd, they're holding this large bank capital framework review. Chair Powell's giving opening remarks.
And what's the practical significance of that for you listening?
Well, this meeting gets right into bank capital adequacy, basically how big a financial cushion banks need, and any changes there. They could directly hit bank dividends, share buybacks, even how much banks are willing or able to lend.
So lending capacity too.
Definitely. So investors are listening very closely for any hints on policy direction. Stricter rules could sour sentiment on financial stocks pretty quickly. It really could shape the outlook for the whole banking sector.
Okay, so that's one major thing. And then, as if that wasn't enough, this other piece of news hit. The one sending ripples through D.C. and Wall Street.
Yeah, the Luna referral.
Congresswoman Anna Paulina Luna formally referred Fed Chair Jerome Powell to the Department of Justice. A criminal probe, alleging he lied under oath about Fed building renovations. I mean, that really escalates the political pressure, doesn't it?
It absolutely does. Now, look, a referral doesn't automatically mean charges will be filed.
Sure.
But the move itself injects a huge amount of political noise into the Fed's world. It immediately sparks concerns about central bank independence.
Especially given President Trump has talked about firing Powell before.
Exactly. You saw the reaction, already jitters in the bond market. Treasury yields dipped. More volatility in gold and the dollar, too, just as a precaution. The key worry here is, how might this political heat actually cloud the Fed's judgment or decision-making down the road? It adds this whole layer of risk that isn't really about the economy itself.
Wow. Okay, so speaking of mixed signals, elsewhere in the markets, safe havens were, mixed. Gold prices actually touched a 5-week high.
Yeah, around $3,402 an ounce, helped by a weaker dollar. Suggests some caution creeping in.
But Bitcoin,
yeah,
it pulled back after rallying over the weekend.
It did, back to around $117,000. This was after President Trump signed that Pro-Crypto Genius Act.
Right. The bill meant to boost blockchain and clarify rules. So that feels like a classic buy the rumor, sell the facts situation.
It really does look like it. Pretty textbook crypto move sometimes. And oil prices softened a bit too.
So putting it all together, what's the picture?
It's fascinating, isn't it? You have equity investors, especially in tech, still embracing risk, hoping for strong earnings.
Right.
But at the same time, the bond market, commodities like gold, they're flashing caution, signaling worries about the bigger picture, the macro stuff, and now these political pressures too.
So, looking ahead, cautiously optimistic.
I'd say that's the tone. Cautiously optimistic. You've got the potential boost from Q2 tech earnings coming up. That's bullish.
But the risks are definitely there.
Looming large. You've got President Trump's August 1st tariff deadline, this ongoing political heat on the Fed from the Luna referral, and just the fact that valuations are pretty stretched after this big run-up.
Back to that price for perfection idea.
Exactly. Any negative surprise. A disappointing earnings report, an escalation on tariffs, more Fed drama. It could spark a pullback. And maybe a faster one than usual given where we are.
So, bottom line, what does this all mean for you trying to navigate this landscape with all these frankly, contradictory signals flying around.
Well, with markets at peaks and just so many variables in play, the regulations, the politics, earnings season, risk management is absolutely key right now, paramount.
So what does that look like practically?
It means maintaining a balanced approach, I think. You want to participate if there's more upside, sure, but you need to be prepared. Have hedges in place or maybe clear stop-loss plans.
Diversification helps too, presumably.
Always. Diversification and just keeping a really close eye on the news flow, especially Powell's remarks today from that Fed meeting and definitely those big tech earnings reports this week. Those are your best safeguards right now.
Okay, good advice. So, maybe a final thought for you to mull over as we wrap up.
Yeah.
Consider how much of this current rally, these record highs, is really being driven by solid fundamentals versus maybe just powerful but potentially fragile market sentiment. And what could that priced for perfection outlook really mean for your own strategy in the next few weeks? Especially if this political pressure on the Fed keeps building. Something to think about.
Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver days key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.